Good evening, everyone. And since some of you are joining us from different geographies, a very good day to all of you. I'm Ranjana, and I am the Director Outreach for our Impact Investors Council, IIC. Most of you know about IIC, but for the others, IIC is an industry body for impact investors in the country, and our key mission is to build the ecosystem for impact investing and to increase the flow of impact capital for the sector. A very warm welcome to all of you to our webinar today. With this webinar, we start the yearly series of celebrating the India impact investing story and share with you by way of debates and discussion, voices from the industry, and research pieces, some of the key investment trends, sectoral highs and lows, successes, and insights into the year that went by. 2020, as we all know, was a very different year. It's the year when the world moved on its axis. It changed the way we lived, we did business, and hopefully the way we looked at the investing activity. But this is a year which proved to us beyond doubt that despite the global health pandemic and its accompanying effects on the business and economic environment, impact investors continue to pledge their support to solving critical social and environmental challenges through investments in scalable, tech-based, innovative social enterprises. So we start our day today with a welcome address from IIC Chairman, Mr. Jinesh Shah, followed by a keynote speech by Mr. Jaap Rienking, Director Private Equity at FMO. There will be a short presentation by IIC on our latest report on 2020 in retrospective. And after that, we have two panel discussions scheduled, one on hearing the investor perspectives and the other one on hearing from the impact enterprises on what went well in 2020 and where we need to do better. Without much ado, I would now like to invite IIC Chair, Mr. Jinesh Shah. He is the co-founder and managing partner at Omnivore. Omnivore is India's first and largest agri-focused fund. He is also a member of the IMC Chamber of Commerce and Industries Agriculture and Food Processing Committee and the co-working group of World Economic Forum related to agriculture. Welcome, Jinesh, and over to you.
Thank you, Ranjana. Thank you for the introduction. Dear friends and colleagues, a very warm welcome to the India IIC's discussion forum, the Impact Investing Showcase 2020 and beyond. My name is Jinesh Shah, and I am the chair at IIC and also a managing partner at Omnivore, India's first and largest agri-focused fund. On behalf of the entire executive committee and the team at the IIC, it is my privilege to invite you to this session where we have a galaxy of investors, asset managers, limited partners, as well as impact entrepreneurs who are gathered here to share their thoughts and perspective about ongoing development in the Indian impact ecosystem. A quick introduction to the IIC. IIC is India's preeminent not-for-profit industry body focused on building the Indian impact ecosystem. We are supported by nearly 50 plus impact funds and foundations who work with us to drive three main agendas for the forum. First, to build the narrative of India as an attractive impact investing destination of choice, whereby investors are able to create a deep social impact as well and generate returns by delivery of innovative but affordable solutions to India's low and middle income populations. The second agenda for the IIC is to create a government advocacy to provide a greater support to the impact entrepreneurs and the asset managers to help them scale and create even larger impact. Third, I'm building a strong foundation for research and publications to be able to support our advocacy efforts with an unbiased and objective data and analysis to facilitate more effective decision making. Last year, IIC itself put out 4 reports on various topics of interest for the impact investors, and we hope to keep this flag flying going forward too. For the current year, we have identified few clear goals. The first one is to expand the good work on working with our international investors and supporters and supporting their investment journey to the Indian impact sector. I mean, our global LPGP meet uh, last year attracted more than 800 odd participants across 20 countries with more than 100 plus limited partners attending. And we hope to continue the good work on this front. I mean, the second one we're looking to for this year is to expand the coverage of impact investing among the domestic institutions, the ultra HNIs, and others to increase the Indian participation in the Indian impact sector. I mean, it is really ironical that the Indian impact ecosystem does not have much support from the Indian capital. This is an area which deserves a serious attention, and it is important that we build a more diversified funding mix for the sector as a whole to encourage more widespread participation by the domestic investors. Third, we want to support and drive policy advocacy in issues for all our impact enterprises and investors and help them to provide a clear and distinct regulatory and legal identity. We ideally would like to reduce the regulatory surprises for this sector. And the fourth area, what we want to focus here in this year, is to expand the impact ecosystem possibilities in the blended finance market, right? It is important that the Indian impact ecosystem start focusing beyond pure equity capital. The fifth and the last area which we really want to focus this year is to specifically work on impact debt financing, which is a critical and a missing link in our impact sector. As the Indian impact sector matures, the availability of debt financing will become more and more important and critical component for the market to scale up. I mean, coming to the topic of the day, the Indian impact investing trends for 2020 and the future outlook is very timely one, right? 2020 has been a landmark year for most of us, and it has been an inspiring journey to see how our impact fund managers and entrepreneurs have not only managed to overcome the challenging period of the pandemic, but they have managed to innovate and rebuild the business plans, the business models to face up to the new reality. Today's conversation are like a trinity of sorts. We will speak to the limited partners, we will speak to the asset managers, as well as the impact entrepreneurs to understand their perspective on what the year had been like, and more important, what the future holds for them. I mean, we're going to have Ramraj and Swasti from the IIC team who will be presenting the study of their study on the impact investing trends. I had a chance to look at the report, right, which is very interesting. While they will make a more detailed presentation, three or four things really stood out for me. I mean, what I've seen is that the overall impact funding of the impact sector has fallen a bit for sure, but the interest in the impact from the investors continues. I mean, the sector managed to attract around $2.6 billion in calendar year 2020 when the pandemic was at peak, and then the sector has done well for itself. The, in fact, even in this market, we have seen that there's a steady growth in the early stage deals, right? With the year on year growth of nearly 20% in the number of the deals undertaken this year compared to the last. I mean, sectors like health have seen a maximum increase in the early stage transactions, almost doubling vis-a-vis the last year, that is in the terms of number of deals. I mean, sectors like education have seen a substantial increase in the interest with the rapid digitization opportunities in the sector, right? We have also seen the sectors like agriculture have done a wonderful job because of digitization. I mean, more importantly, what we are seeing is the emergence of a very vibrant, what we call as a technology for development sector, where our entrepreneurs are building customized, ground up tech based solutions for the low income customers, particularly in the vernacular languages. This sector is witnessing a significant surge in the investor interest. I mean, I think we are entering into a very interesting phase in the history of Indian impact sector, and I look forward to the deliberations and the discussions to understand more. I once again welcome all of you today for the today's discussion and hope that you will enjoy and find it useful. Uh, Without further ado, I would like to hand over this discussion to Ranjana to take the proceedings further.
Thanks, Jinesh, for your kind words for ISC and your continued support and guidance for our initiatives. Now, ladies and gentlemen, I'd like to invite Jaap Rinking for his keynote speech. Jaap Rinking is the Director, Private Equity at FMO Development Bank. He has been with FMO for over 20 years. He has vast experience in areas like credit risk assessment, structuring and execution of corporate finance, project finance transactions, and expertly managing relationships at senior level with a focus on emerging markets. Prior to essaying several roles at FMO, such as Director, Financial Institutions, heading the agribusiness and diverse sectors, departments, and so on, he worked as a senior credit officer with Deutsche Bank for 2 years. Welcome on board, Jaap, and over to you.
Thank you, Raja. So it saves me some time because you did the introduction of myself. So thank you very much. And thanks the Council for organizing this event, and more specifically Ramya and team to also invite me as a keynote speaker. I will give and start then with a short introduction of FMO. FMO is the Dutch Development Bank, which is a public-private partnership in the Netherlands, and they are started as a bank to really focus on the development of emerging markets by supporting private entrepreneurs. In our activities, we are providing debt, equity, and everything which is in between, but also guarantees to support our clients. We are focusing on SDG 8, decent work and economic growth, SDG 10, reducing inequalities, and SDG 13, which is climate action. So those three SDGs are also dedicating our sector choices and where we are active. We are active in all emerging markets, and in India we have a portfolio of approximately euro 650 million invested or outstanding in loans. So when we will look back at 2020, especially in 10 years from now, we will say that was the year of COVID-19. And it did have a lot of impacts. It did have impact at the level of our personal lives. I think when I related back to my own personal environment, I learned how to work virtually, and now I do almost everything virtually and online. And also some of our colleagues, which are not from the Netherlands, were not able to travel home for a really long period of time, which really affected also their personal lives. And I'm sure you'll have examples in your close environment as well. And we should not think and leave that alone, because it does have a huge impact on your well-being. The second impact was on the business, how we do business. I think especially in the financial sector, you're used to do business at the level of people. And now, so it's far more difficult to connect and engage and generate new business relationships. And if you do, it has to be done online, which is totally different than we were used to. However, we get used to it and we will find ways how to do it better. But I'm pretty sure we will need to meet in person as well at a certain point of time. Then the third impact is, of course, the economic impact, which also impacted India to a large extent. So we came to a lot of negative growth, different per country. I think India was particularly negatively affected with a negative growth of approximately 8%. However, there's a strong difference in between sectors. So there were also some sectors where you saw clear winners, such as all things which has to do with computer technologies, digitization. I read the report of the council, and it was clear that education, online education, was a clear winner last year in number of investments, but also growth. Whereas at the same time, the schools were mainly, universities were sometimes closed. So also here a strong difference between real life and computer life. But also food retail did well, but there are also some clear losers like hospitality services, manufacturing, and SMEs due to the lockdowns. The result was that there is an increased level of unemployment, but also a strong increase of inequality. which is one of the SDGs we are focusing on to reduce. However, the COVID-19 really made a surge in inequality across the world. So not only in emerging markets, but also in developed markets. But in emerging markets, you have far more a lack of social safety net, whereas in more developed markets, governments were able to support to a large extent, which is not always possible in emerging markets. And then as a side effect, also women and youth are disproportionately affected. During the pandemic, maybe that was a positive thing, especially in India, the skies cleared. And especially, I think in April and May, I read an article that in India, people could witness the Himalayas again from far further than for a long time. And that was, of course, due to the lower economic activities, which also resulted in less pollution. So I think it's a signal that we should not forget that the COVID-19 will maybe be tackled, but climate change remains an issue. Governments also became and had less money available to focus on investments in renewable energy, whereas it will be important because we don't see that every day maybe, but it does affect also public health. Well, in 2020, the tendency in the world became also less focused on globalization. There were two factors causing this. The first one was the trade war between the US and China, which really affected the cooperation between those two countries, but also resulted in higher prices for goods because there were barriers of trade reinstated. The second one was the vulnerability of the supply chains, which became evident during the pandemic. So it was less easy to transport goods, and this whole integrated production chains seems to be very vulnerable. So as a reaction, you see that people and countries are becoming more self-sustainable again, so that it has a negative effect on globalization. It also has a potential effect on increased tensions in the world going forward. And I like to stress here that FMO strongly believes in the fact that the SDG challenge ahead of us can only be met by an enhanced cooperation in between governments, businesses, and other stakeholders. DFIs should play a role in this, and also FMO should play an important role to support private entrepreneurs in developing countries. So what did we do in 2020? As mentioned, it did have a huge effect on our ability to provide new business, but we did provide a combination of financial and non-financial assistance. In terms of financial assistance, FMO provided liquidity support, capital, and guarantees to our existing customers. We did also invest in venture capital type of investments, primarily in Fintech, Agritech, and off-grid energy. But we also had a package of non-financial support, which included advisory services, learning and exchange platform, webinars, and emergency grants. The problem, however, was our limitation in traveling and to create new business, because we still strongly believe that before entering a new customer, you should be really engaging and also engaging in person. So we did less business with new customers. Well, how did we do financially? Well, to be honest, it was not a really successful year. We did make less investments because of what I just mentioned. We had to work remotely, so most of the time everyone worked from home, and we were not able to travel. So that made it difficult, and ultimately we also made a quite significant loss, mainly due to the fact that the valuations in our equity portfolio went down, and we had to take impairments on our loan portfolio. However, that year has ended, and we are now in 2021. So what do we foresee? I think most of us do see and can see clear silver linings. I think the forecast for India are the economic growth forecast is bright. I think I've read in some papers that people expected a GDP growth of around 12%. COVID-19 seems to get to an end, although I'm personally still a little bit in doubt, because I also we do see the vaccinations, we do see more people getting resistance, and at the same time this virus has surprised us already a couple of times. So although I'm personally pretty optimistic, I'm also a little bit cautious, because you never know with this virus. So how do we look at India in 2021? Well, as mentioned before, India is a very important country for us, and we are really focused on continuing supporting the country. We remain focused on providing solutions for the bottom of the pyramid by job creation and supporting economic growth. So we will continue to work with the MFIs, the NBFCs, focused on SME finance. We also strongly believe that digitalization will play an important role. I think you just mentioned that, but we fully concur with the fact that digitalization will play an important role in the further development of crucial services such as financial intermediation, easing of payments, in the agriculture sector and its logistics, around food production, in education, job market, and healthcare services. So we really see a strong trend that the digitalization will really help all these type of services. So as long as we cannot travel, we will remain focused on our existing customer base and very selectively invest in other promising segments in the market, whereas we also need to be really comfortable with the people behind the companies. Where do we see other new opportunities? I think a big market which will also evolve in India might be the electrification of transport and logistics. Therefore, it's also necessary to make technological investments to bring demand and supply of electricity together, because more and more renewable energy is produced locally, and it's not so easy to predict when, where, and what energy is produced where, because sun, wind is less predictable than a coal-fired power station. And with the renewable energy growing to a large extent, it's important that the network is able to service that demand supply changes. So therefore you need a lot of technological investments in the network of an electricity system. So that will be a segment, and another segment will be the storage of the renewable energy, because then it can be made available also at the time the sun is not shining. Well, another market for FMO will also be a focus on climate adaptation, such as forestry and other climate adapting activities. With the large number of rivers and the huge Ganges Delta, this will also be of relevance to India. Both the green electrification and the climate adaptation efforts will help India to have a more permanent, clear view on the Himalayas and preserve the glaciers. So this brings me to my closing remarks. India really is, from our point of view, a country with almost unlimited possibilities. It has a young population in general, well educated. And what's always striking, that the people I meet have always a strong entrepreneurial spirit. I think that's not, it's more like a general rule than an exception. And because of that, there's also a strong innovative power in the country. So I think it really offers a lot of opportunities. Yeah, Ramrai also asked me to say something about what should change for a foreign investor. to go into the country. And unfortunately, there are some things to mention. And I will not go into them all in too much detail, and I guess you mostly know them already. First of all, it's about regulation. I think regulation is changing quite often, and sometimes even, and it's pretty complicated to bring in money to India because of this changing regulation, and even sometimes local law firms have contradictory advices. So that makes it not easy as a foreign investor to come in. But sometimes also when you want to repatriate funds because you did an exit or you restructured a loan or you finally were able to get a collateral executed, it can become really difficult to bring back the money to FMO. And the second one is actually the legal system can improve for foreign investors. It's often takes a long time. It's difficult to find the right procedures, and it's sometimes very difficult to execute and enforce on your collateral rights. So I think those two issues are really important to make easier. Although it so far has not withheld us to invest in India, but I guess also to attract other investors, it would really help if it would be easier on those two. Well, as mentioned, we are committed to continue being active in India. We really like the market dynamics. And I'm sure that with good cooperation between the government, private sector and the financiers, India will have a bright and good future. And hopefully next conference or event, which will be organized by the Indian Impact Council, we can also meet and engage on a more personal level. Enjoy the remainder of the event. Thank you.
Thanks, Chap, for an excellent summing up of the limitations and bright side this pandemic brought to us. The key takeaway for us personally are that India is a country of focus for FMO and will remain so in 2021. And job creation, agri, logistics, SME financing will continue to be the focus. No doubt, technology-based investments and climate-friendly investments will be the focus for FMO. And I think as a country, we should be, I think, stepping up to the challenge of providing more innovative solutions in these sectors. Of course, our legal system and regulations need to improve to make investments easier. So thanks a lot. Thanks a lot for this excellent keynote speech to kick off the day. And now, moving on further to our next session, I would like to hand it over to my colleague, Swasti. Over to you, Swasti.
Thank you, Ranjana. And hello, everyone. I'm Swasti, Senior Manager at the Impact Investors Council. The IIC launched its annual research report 2020 in retrospect, India Impact Investment Trends on 15th February. For those who haven't had a chance to read the report, it is available on our website, www.iic.in, under the Research and Publications section. We will provide you with an overview of the report findings today. The report findings are very much in line with what Jaap said today, that digitalization will play an integral role in financial intermediation, education, healthcare, agri supply chains, helping the countries to become more self-sustainable. We already saw this in the year of the pandemic. Before we go into the report findings, I would first like to invite Ramraj Pai, CEO, IIC, to tell you a little bit about IIC's research initiatives and share his perspectives on the overall India impact investment trends.
Thank you, Swasti, for your introductory comments. I think this is a rare day when we are on time, almost, in fact, ahead of time. So in the great spirit of trying to keep things, moving along in line with the schedule that we've set, I'd request Riya to now put together the presentation. Our presentation has broadly two parts. I'm just going to give you a high-level sense of what's the data that we are seeing and what is some of the trends that we are seeing. And then Swasti can then give you a little bit more of a granular perspective in terms of what is happening at a sector to sector level. So that's a quick kind of thing that we want to do. Our allocated time is 15 minutes, but we'll try and wrap this up earlier. And if that means we're going to have more time for question and answer, that's fantastic. For anyone who has questions on the presentation we are making, please do put them in the Q&A, and we promise that we will try and answer them either now or at the end when we have a sort of a brief conclusion session from me. Let's move on to the next slide, Shreya. Okay. Very briefly, the IIC, most of you are familiar. We are the leading preeminent national industry body to strengthen the Indian impact investing sector. Our mission is really to encourage private capital to bridge the social investment gap. We are presently supported by more than 40 prominent impact investors, consulting firms, and other ecosystem players. And as Jinesh mentioned earlier, we focus really on 3 pillars. One is how do we build the narrative and communicate the narrative about the quality of work and the social impact that is being created by the Indian impact sector. How do we communicate this to investors? How do we communicate this to domestic HNIs? How do we communicate this to other stakeholders, all of who have an important role to play to ensure that more and more capital comes into this particular space? The second pillar is really around policy advocacy, to see how is it that we can work with government, communicate what we are doing to the government, so we have a more facilitative environment in which impact enterprise can thrive. And the last is really around publishing ongoing research and publications, which strengthen our ability to communicate the issues under points 1 and 2, which is really put a base of strong analysis and research to help investors, to help governments, to help policymakers really support us. That's a quick summary of what IIC is all about. Let's move on to what IIC's research pillar does. We really provide our members with unique insights on the Indian impact investing space. At least we try to. We have some way to go, but I think we've made a fantastic beginning. What we try and do is more than the storytelling. We try and have data-driven research and analysis. And at the heart of all of this is our investment database of about 800 plus impact enterprises, where we have data on these organizations for the last 10 years. We capture venture capital activity in the for-profit impact sector, and then use predefined impact inclusion criteria to build this database. And as Dinesh pointed out, we published multiple reports last year. We hope to continue to do that this year also. That's a quick sort of initial spiel on IIC, which I think is important for me to highlight. Let's quickly move on to the report, which is really what we are all here for. So if you really look at the report, some of the high-level messages, 2020 has been a very difficult year. Notwithstanding all the challenges, the sector still mobilized almost $3 billion during the year. 200 enterprises raised upwards of $3 billion last year. There were 243 equity deals. So, obviously each enterprise may have done more than one deal. And while overall, if you see, there's been about a 25% fall in the sector in terms of overall funding raised, the interest in seed stage and early stage deals continues to be extremely strong. In fact, even in this challenging year, we saw almost a 20% rise in seed stage deals. Clearly, the education sector is one which has really benefited pretty substantially. Obviously, lots of people went online. I think digital adoption was high. So that's something that is very interesting. And clearly, I think the other trend that we've seen is that the increased acceptance of digital solution has meant that more and more of the impact solutions that our entrepreneurs are publishing is really coming out of tech-based solutions. And we do expect that over a period of time, this whole kind of trend will only accelerate and grow. Those are some of the high-level messages and data that we saw. What I'm going to do is now is going to hand over to Swasti to just give us a little bit more of the granular detailing at a sector to sector level.
Thank you, Ramraj. Now let's see how each sector performed, starting with agriculture. Very positive investment sentiment across the agri value chain. The agriculture sector enterprises attracted about $440 million across 52 deals in 2020. Now, deal flows in terms of number of deals remained almost unchanged in 2020 versus 2019. Multiple agri-tech startups in the agri inputs advisory and market linkage subsegments have come up in the past few years. And that is probably why about 70% of investment deals in the sector have been into seed and Series A stage enterprises, both in 2019 and 2020. The agri-tech sector overall emerged as a real winner in a year when the pandemic caused widespread disruptions across the agriculture supply chain. Industry experts expect a steady flow of investments in agriculture throughout 2021 as well. Moving on to education, education really took the lion's share of funding in 2020. The sector saw a 65% year-on-year growth in investment volumes and about a 20% rise in the number of deals. Now, while the national lockdowns wreaked havoc for the traditional modes of education, there was definitely an urgent need for remote tech-based solutions to keep the flow of knowledge running to 335 million students enrolled in the country. This crisis actually created an opportunities for the existing edtech platforms. Overall, the investors backed later stage enterprises which have proven success. So the likes of Unacademy, Vedantu, QMath, and Lead School got a substantial share of the funding. The spike in the investments in the sector primarily was because of the rise in Series B and later stage deal funding. This late stage deal saw a 70% increase in investment volume and 50% rise in the number of deal flow. However, contrary to the other education subsegments, education finance enterprises attracted a minuscule $29 million in 2020, which was an 85% fall in investment volumes from previous years. This is somehow, natural because schools remained shut for a material part of the year, and so education finance really suffered. Now, moving on to healthcare. Now, surprisingly, a year with a health crisis, the healthcare impact enterprises attracted the least volume of investments relative to other sectors. There was about a 70% fall in investment volume and 20% fall in deal numbers versus 2019 levels. This, however, is because multiple large ticket deals took place in late stage online pharmacy segment in 2019. So bulk of the investment in 2020 was concentrated in seed stage deals, and the seed stage deal in fact saw 85% rise in the number of deals across healthcare segments. Investors put their money in early stage healthcare enterprises focused on telemedicine, AI-based solutions, cloud-enabled diagnostic tests, etc. As natural tech enhancement in the sector, in our opinion, will prove to be a critical enabler to provide last mile healthcare access to the masses. And we're really hoping to see renewed investor interest in enterprises which provide affordable health tech solutions in 2021. Moving on to financial access. In line with previous years, the financial access sector received the maximum volume of investments in 2020. However, there was a 50% fall in investment volume and 35% fall in number of deals. Now, the fall in investment volume was primarily because of fall in investments in some key segments like microfinance, housing finance, and CV finance. Reasons for this fall, I don't think we really need to explain them. Needs no explanation. This was because these were the most affected market segments due to the pandemic and the lockdown. The SME finance segment saw lukewarm investment activity during the year. Fintech segment, however, performed rather well. Fintech essentially, we refer to Fintech as enterprises who typically leverage technological support, automate and improve financial services, including but not limited to savings tech, insurtech, online banking, to provide last mile solutions to the unbanked and underserved. This segment did well since digital payments and transactions recorded remarkable growth given the strict norms around social distancing for majority of the year. Similarly, insurtech, banking, savings tech have also emerged as a key impact solution for the Indian market in 2020. Moving to technology for development. Technology for development, typically, the segment essentially covers cross-cutting use cases of technology for social impact that provide access to new markets and new products, access to new sources of income, or access to connectivity like SME tech, or even local language vernacular media content. These do not cover tech-enabled solutions, which we've covered in other impact sectors, like agri-tech or health tech. Like we mentioned earlier, technology adoption leapfrogged years in 2020. This opened up exciting opportunities for impact startups focused on SME tech, utilitarian services, and local language content. Opportunities in digitalization for SMEs was a substantial focus area for investors in 2020. Early stage innovative tech-based enterprises catering to the SME sector actually saw as much as a 7 times increase in investment volume, 51 million in 2020 versus $6 million in 2019. At an overall level, however, this segment saw a decline in investment activity. We're hoping to see the market recover in this segment. I will now hand over to Ramraj to conclude.
Thank you, Swasti, for that very comprehensive coverage. And, I'm sure you all would have got a good sense of, how things have been going. I think the tech for dev space is very interesting. And if I may say, the trends in tech for dev, most of these trends have continued through Jan-Feb. In fact, just last week, we were looking at all the data of Jan-Feb of this month, which we review on a weekly basis. And I think by and large, many of these trends continue. Tech for dev, in fact, continues to remain highly robust. So I have a couple of minutes, and I thought we can just take, just a pause and look at what are some of the key conclusions that we are seeing. I think notwithstanding a very challenging year, impact investors have continued to pledge their support to solving critical social and environmental challenges. That's, I think, one big conclusion that, the commitment to this sector remains fairly high. The sector, by and large, has remained resilient. Yes, there have been pockets of stress. There's no denying it. But I would say, by and large, the sector has proven to be resilient. Several of the entrepreneurs have been very quick to pivot and reorient their business to meet the needs of the masses. In some cases, we've actually seen changes in the business models. There have been a little bit of a fall in investment volumes, as Swasti mentioned. And that obviously has been driven by some of the challenges in the financial sector, which is very obvious. And this is something that we saw not just in early stage venture capital investing, that by and large, if you look at funding across even larger NBFCs and banks, the issue, it's a issue which is across. The impact sector will clearly be more tech-led in the future. I think the lockdown, social distancing has rapidly increased comfort in using the internet. Now, whether this has been people have come kicking and screaming to the party, or it has been a gradual process is left to the broader judgment of people. But clearly, the usage of internet and digital devices, digital processes increased quite substantially. And therefore, adoption of anything which is digital and tech-led is going to be the way for impact investing, impact solutions to go forward. I would say these are some of the key conclusions that we are seeing. As I see in the research team, we will continue to come back to you and keep bringing across whatever trends that we've been kind of looking at in the market. That pretty much summarizes our presentation, pretty much in time. In fact, 1 minute ahead of time. Let me now give the mic back to Swasti to take the conversation forward with Vineet and the panel discussions.
Thank you, Ramraj. We are now ready to start the first panel discussion of the evening. We have a set of eminent international and domestic impact investors as panelists. A very warm welcome to all of you. We're looking forward to learn about your first-hand experiences, impact of the pandemic on your portfolio, impact on investment flows, outlook for fundraising, emerging opportunities, and your future outlook for the Indian impact investing ecosystem. We have Dr. Pinak from HealthCord, Rema from Ankur Capital, Claudius from Artha Impact, Maggie from the Lemonsil Foundation. Vineet Sukumar, founder and managing director of Vivriti Capital, will be moderating the panel discussion today. The panel will take audience questions in the last 15 minutes. So do type in your questions on the Q&A chat bot on your screens. Over to you, Vineet.
Thanks, Swasti. And thanks, Ramraj and team, for organizing this most timely as we are, getting into the swing of things in March and thinking about what the year has in store for us. So as I think we got the context. We've seen a stellar year for private equity and venture capital, and ranging from a very steady deal flow in the first 2 months of the year, we saw a complete break in Q2 to a massive surge in Q3 and Q4 of the last year. We've actually seen it all. And while we are very familiar with stories that have scaled like a Jio, like a Zomato, like a Delivery, a Byju's, and so on, But the objective of this panel is more to spend time on early stage, right? That forms the foundation of the years to come, and focus on some very pertinent questions. Which sectors did investors align to? What was investment activity like in the early stage space? Were there accidents, wind-ups where companies sank without a trace? How do investors feel about the year coming up, and do they see commercial returns aligning to the extent of impact in the investments that they're making? Now, to answer this, we have a highly experienced panel that should delight us for the next 30 minutes or so. We have Claudius, who runs Reanta Capital, based out of Zurich, a single family office focused on India with nearly 30 investments till date across education, healthcare, agri, clean energy, waste, etc. I'm sure he can tell us a lot about his philosophy. We have Maggie, who's joining us from the Lemelson Foundation, based out of Portland, Oregon. Incidentally, I think it's 5 a.m. her time. But I think while the foundation has been active in grants, but venture capital and private equity form a large part of their allocation, of which incidentally more than 80% is India. Welcome, Maggie. We have Dr. Pinak Srikhande, Director and Health Quad. Health Quad, as the name suggests, is focused on healthcare, Series A and B investments with a focus on health tech. Accessibility, affordability, and quality are important metrics to assess any investment opportunity. Welcome, Pinak. And finally, we have Rema Subramaniam, founder of Ankur Capital. Ankur Capital, incidentally, actually raised their second fund during the onset of COVID, post lockdowns, and we would love to hear from Rema about her experience as she raised capital. The firm focuses on agri and health, and recently more interested in edtech, fintech, etc. And as for me, I'm the founder of Vivriti Capital, that runs the largest marketplace for fixed income with in India across products. As we go around the table, we'll have a bunch of thought-provoking questions. Panelists will try to finish this in 30 minutes, leaving some time for all of you to ask us questions. The first question is to Pinak and then to Rema. We have gone through a very tough year where pre-existing investment thesis may not have held up. Would be great to hear from you guys. How has your existing portfolio fared in this period? Have you seen accidents? Have you been surprised on the positive? Pinak, over to you.
So thanks, Vineet, and thanks, IC, for having us on this panel. So Vineet, to answer that question, there were two categories of portfolio companies that we were looking at. One was, of course, the brick and mortar models where patient footfall actually suffered significantly during the time of the lockdown. Planned procedures went down, and that obviously impacted the first quarter earnings of these companies. There were obviously cost-cutting initiatives taken by the company to manage the situation in an appropriate manner. To a large extent, there were no layoffs from any of our portfolio companies, but there were deferments in payments to employees, plus, of course, some salary cuts that were put in place. But the demand for services started coming back August onwards in a big way. There was pent-up demand which started to gradually come back onto the table, and that has been consistent phenomenon now over the last few months. What really surprised us were some of the models that we had invested in, which were basically technology driven, which got sudden impetus during the COVID crisis. Of course, the first couple of months, everybody was just trying to figure out how to manage this situation, but then suddenly there was a significant impetus given for some of the companies, including the likes of a company of ours called Medica Bazaar, which is one of the largest marketplaces in India for medical supplies. And this gave a significant fillip to the company because medical supplies, especially COVID-related supplies, were difficult to come by, and they were able to aggregate it from not only from India but from across the world. They were able to get shipments into India and also sell COVID related stuff outside India, which was a huge boost to the company. Similarly, a portfolio company of ours called Neurosynaptics, and you will hear more about that company in the next session, again got a significant boost because it is in the hardware and software for telemedicine consults and the service of telemedicine. And as you would imagine, that telemedicine was one sector during the pandemic which suddenly got a significant boost. Similarly, there were other companies which did have, there was a definite impact for the positive, because there was more focus on health now, generally from both government as well as individuals who are now wanting to take care of their health better. So health as a sector has benefited significantly, I would say, from this pandemic, albeit the first 2 months being not as great as what one would have expected during a normal year. But subsequent to that, the things have really progressed well for the health sector. One thing that has been a challenge for us is, how do we discount the COVID behavior to the valuation structures has been something which we have tried to think about and arrive at rational valuations, because there is this huge boost. We really don't know how much that rocket is going to last longer, and there could be some plateauing out of that wave, is what we believe.
Thanks, Dr. Pinak. Rema, would you like to tell us your thoughts, since you focus on health and agri both? Would be great to hear of your experience in the last 12 months.
Sure. So I would put it actually in 3 buckets in our portfolio. There was one bucket which clearly had tailwinds. That was because of the fact that there was greater embracement of technology, especially around agri-tech. So some of our companies like Crop-In Technologies and Big Heart had a big boost. So a company like, for example, Big Heart, which is an e-commerce for agri inputs. When the lockdown occurred, that was almost very close to the peak sowing season. So, and the regular channels having been distribution channels were disrupted. So it obviously gave a great fillip to that business was one. And the second part of it was the fact, that digitization that has happened and the adoption of the digitization will lead to a behavior change. So I would say it's a fact there's one segment of businesses which have had a clear boost in terms of tailwind that has been there. There is another bunch which had a lot of trouble because, more so from the fact that from cash flows getting impacted, and some which had traditional distribution channels. For example, the businesses, their front end, the larger businesses, and obviously the distributors, the cash flow trickle was severely impacted, and the business went down. Fortunately, most of them have recovered after and are now at the pre-COVID levels. So these are businesses that have had challenges, but have come out clearly at this point of time, ready to take off now. Right? And this has happened in some of them, even in healthcare, for example. Unfortunately, while COVID was clearly a healthcare issue, in our case, some of our healthcare businesses did have challenges because of the fact that, we have, for example, one in eye care. They had to close down because there was no opportunity for them to open their hospitals. But very quickly after they opened up today, they have surpassed pre-COVID levels, and they have gone past that as well. some like, Niramai, which has technology-led things. And there again, was something that was an issue. But they quickly adopted their technology for COVID-led testing. So they've all had to do things to and be innovative of how they would survive. But they've all, I would say, come out winners. There are a couple which are still facing headwinds. And hopefully, in the next quarter or two, they would be able to come out. All in all, compared to the fact that, in March of last year, where we thought that this could be especially around, not even March, but in April, it was like doomsday. Everybody thought, God alone knows this might take 2 years, 3 years, whatever. I would say it's the fact that things have actually come back very quickly, right? So, and we've seen, and the things that have been post-COVID that I would say are clear changes that have taken place. One is the fact that the entire rural India has been recognized as a market to be reckoned with, right? Which till now was always an afterthought. Today, due to one, because of the fact that because of all the government spending and other things, and the fact that the agri sector continued to operate during the COVID times as well, that there is money in rural India, and due to which that's recognized as a market. So industries, startups are all looking at Bharat, at India too, various names, next billion, but essentially recognizing that there is a target segment there, which are there as consumers, as producers, as supply chain folks that are there. So I think that has been a very, very strong after effect of COVID, which I think is very positive. The second part of it is the fact that the digitization and the change in behavior that has happened in the segment is here to stay. Right? So I think these are two very, very positive outcomes that have happened due to COVID, which I think is still now one of the biggest challenges that the impact investment community has faced is the fact is trying to convince mainstream investors that this is a market that is vibrant and that's there for you to go after. Post-COVID, I think this has been recognized. So I think this is a very positive impact for this community, the impact community, investing community is what I would say. So use of technology for this segment, use of looking at innovative ways to address this market segment. We can talk more about it in this as we go along in this session.
Thanks, Rama. And I can personally attest to some of what you said. We had a client who was selling Swiss watches, who started selling Swiss masks and survived, right? So there are fantastic stories of the great Indian jugaad. On that note, moving to you, Maggie. You're based out of the US. India is one of many countries where you can choose to invest into. How do you see the year coming up, right? Do you see your allocation for India increasing? Do you see India as a great destination for impact and commercial returns as we look ahead? Over to you.
Yeah. So, first I would just echo what Rema was highlighting. I think that India proved one of the most resilient markets, at least that we're directly involved in. And it was already pre-pandemic recognized as a market with really robust pipeline across sectors and sort of a breadth and depth of pipeline where you get that variety across sectors. There really is a continuum of impact and financial return, which I think really strengthens that actually helps the entire industry in terms of strengthening opportunities and connectivity. And so, I think we focus because, as you mentioned, we're a sort of a grant maker first and an investor second, that that we've spent a lot of time, appreciating in India, what comes before that, what has enabled that pipeline, and some of this resilience in manufacturing and other aspects of a more commercial environment that has enabled this success. And additionally, we're pretty focused on R&D based enterprises, and so we look at India as an incredibly attractive market because we think that to address the Sustainable Development Goals, you're going to need really disruptive breakthrough technologies and strong science, technology, and innovation systems. And unlike many other low middle income countries, India has been strengthening universities, investing in R&D and other critical systems for more than 50 years. And that's really been bearing fruit over the past 2 decades. And so we see, as a result, not just sort of the adapted technologies and the capability to adapt technologies, we see, novel breakthrough technology platforms and a talent base that knows how to do that and how to rapidly commercialize that. And as a result, there's this amazing capability to be very efficient with your capital and to really leverage those opportunities. So for us, that's what has been the difference. And I think we just saw how mature some of those capabilities were in the response to COVID. And so for us, it doesn't dramatically change the allocation for investment because we are sort of impact first. But what it did do is it did, the pandemic, I think for us, highlighted, okay, so where are the weaknesses in the systems that support resilience? And one area that we saw was access to working capital is still inhibiting growth for companies. And I think we're not alone as an impact investor in looking more closely at the role that we could play in addressing that to further strengthen India's attractiveness to those who might be more oriented towards profit or might not have the appetite for risk that we do as a philanthropic funder. So I think that's an area that we might grow in the future. But broadly, I would say, it certainly didn't make us take pause from investing. I think over the past year, it was difficult to form new partnerships and relationships in that environment. But where we could work with our existing fund managers to say, what are you seeing? Where do you feel like you need to actually deploy more capital right now? And looking at the full toolbox of what we have available to us in terms of grants, loans, and program-related investments. Tried to be supportive in that way, and continue to do so.
Thanks, Maggie. It's for me, it's so encouraging that India was not until too recently being seen as an exporter of services, but to hear about India being as a destination for R&D is so encouraging for me personally. Switching gears, we have constantly heard about the kind of liquidity that's awash in the market. I'm quite keen to understand, is that really impacting money coming in from LPs into early stage funds as well? And are we seeing fund sizes getting larger, LPs allocations and checks getting larger? Let me start with you, Rema. You've done some fundraising recently. What has been your experience? And then we'll switch to Pinak and then Claudius.
Yeah, so one is the fact that, like I said, there's positive things that have happened, especially the sectors that we look at, has created this interest among investors. The one thing I must say is the fact a lot of our conversations actually started before COVID itself. So to that extent, we were fortunate in terms of the fact that while we could close those conversations, it had been started before COVID as well. But it didn't. The conversation did not flag just because of the fact that this COVID had struck, because people still saw the opportunity, the longer term opportunity, because venture capital is over an 8-10 year period, right? And there's still a lot of it's seen as a huge opportunity. Right? And the fact that these markets are opening up, the impact markets, that's essentially the next billion Indians, is opening up, is seen as a very, very positive thing, is one. Second is the fact, I would second what Maggie was saying, that especially around science and technology, that India is seen as being a frontline player. So we have, for example, companies that, like we have a company, for example, which is an alternate protein, and they are among the top players globally in this space. Right? So, and this is very, very cutting edge technologies, not just your Me Too thing. So these kind of science and technologies coming out of India, the fact the vaccines itself, if you look at it, has been a major, major success story, right? And over the last decades, this has been picked up. So it's not happened overnight, but the fact that it's coming to fruition and it's there out for everyone to see is basically creating that film. So I would say that the investment market for this segment will be vibrant, and we are seeing this on the ground. Our companies which are raising capital in agri-tech and health tech are seeing that. And the same goes even with other technologies for development. So basically, if you look at, for example, vernacular technologies in EdTech, if you see, there's a lot of investment that's going into it. There's a lot of interest that's there. So I would say that the impact investment space will continue to see interest from existing impact investors and also new investors who are seeing this opportunity, both directly into funds and directly into enterprises. I see very, very positive trends going forward in these sectors.
Very good to hear that. Pinak, over to you. Are you guys seeing a lot of liquidity heading your way?
Yeah, so as Rama, we too had a first close of our fund during the pandemic. Of course, a lot of the conversations had started before the pandemic, but the pandemic did not slow anything down. There was no fallout of any investor because of the pandemic, and everybody who we were talking to committed to the fund in the end. And there were new conversations that have started even after the first close, and there is a good traction on to the extent that we probably will be increasing the size of the fund because of the kind of traction that we are seeing in the market today. The only challenge is that some of the LPs who would have liked physical meetings to gain confidence and trust in what they are investing in, that has unfortunately not happened because of the pandemic, and that is slowing down the process a little bit. It could have been much faster, but there is certainly no dearth of interest. In fact, the interest has if I would say, increased, given the fact that we are now looking at, we were always healthcare focused, and with the pandemic, healthcare has certainly looks far more attractive, especially the digital and health tech companies that we are looking to invest in.
Very glad to hear that. And on the note of operational difficulties in diligence and travel, Claudius, how are you seeing the market? Is your pace of investment picking up? Are you also facing similar difficulties on diligence, etc.?
To be honest, after the first shock of the Corona crisis, when the Corona crisis hit in for the first time in April, May, with the first lockdown, there was some time of uncertainty, maybe 2 or 3 months, where a lot of investors were confronted with investment freezes. But after that, I saw everyone coming back. And since then, I saw investment activities as usual. And going forward, I can only speak for ourselves. We don't have any changes to our investment strategy, no changes to the negative side. We are thinking about how we can even grow our portfolio. And if I look to my peers, I don't see any changes there. And overall, I think that 2020 was actually a very good year for impact investing. I think 2020 has shown us how vulnerable we are as human mankind. And I think many investors now realize that money can actually be used more intentionally to fight the real problems that we are facing. And I expect from that a huge boost for impact investing worldwide. And as a consequence of that also for the Indian impact investing market.
Right. Given the time that we've taken so far, I'm just going to jump to the last question on my list and open it out to all the panelists, which is that we've come out of a challenging year. We have seen a sea change in the way investing has happened. We are seeing changes in liquidity. We are seeing changes in business models. A few thoughts on how you see the year ahead. Do you see your own investment pace picking up? Do you see fundraising picking up significantly over last year? I mean, are you seeing a growth on both fundraise as well as on investment? And are there specific business models that where you are getting more aligned to versus what you were doing last year? So I'm going to open this up to everybody, starting with you, Maggie.
I don't think that we'll necessarily increase investments. And that's just because I think we have, we're balancing between grants and other tools to make the changes that are necessary. I do think that you will see a shift, at least for us, similar to our keynote speaker. We're really interested in the opportunities in climate change adaptation and mitigation. And that may require slightly different structures. We're recognizing that, some of the traditional equity fund structures may or may not be best positioned to address some of the gaps in capital access that we're seeing. So we're looking at, is there a role for us to play where it may require a large amount of capital into evergreen structures that are spread across a number of rounds, because those markets are generally just less mature and the development cycles are longer. So I think those are the kinds of shifts you might see, at least from us. And yeah, I'd be interested what the other panelists see coming down the line.
So this is interesting. I remember that you were speaking about permanent capital vehicles. Have you seen these kind of vehicles emerge in India?
A few, there hasn't been great success to date from what I've seen. I think there is a massive hesitancy from the LPs and concern over liquidity. So it is trying to find what are the structures that might address those concerns, and what's the role of the much more risk tolerant capital, like a family foundation based in a foreign market. And how can we leverage our willingness and appetite for risk in order to make those vehicles more viable.
Thanks, Maggie. Claudius, you've invested both in funds as well as in direct opportunities as well. How are you seeing the coming year shape up? Are you thinking of working more with fund managers? Do you see direct opportunities as well coming up? And you've been fairly sector agnostic across. So are there specific sectors you see as more interesting for the coming 12 months?
A good question. To be honest, our investment strategy has been in place since 2008. And since then, it of course evolved, but more in terms of ticket sizes and how deals are sourced and managed. But what hasn't changed since 2008 is our strong conviction that the odds of solving some of the most pressing issues are higher if we collaborate with others. And we will continue doing that in the new year. What hasn't changed either is our focus on business models which serve the unserved, which improve the lives of those living at the base of the pyramid. So our plan for next 12 to 5 months is really to is really not different to the plans for last years. We aim to add 2 or 3 new investments to the portfolio. Our main sectors remain agri, healthcare, and education, but we are open for other sectors as well. We pursue follow-on investment opportunities when they arise, and also we seek exit opportunities when they arise. So the whole Corona crisis in 2020 hasn't changed our investment strategy a lot, but what we want to really pursue this year is to be open for more explorative investments in sectors which are new to us, where we think that our investment could be catalytic. So that's something that we said this year could be our priority, to look beyond the typical sectors in which we invest and look beyond the typical structures through which we invest.
Thanks, Loris. Pinak, over to you. How are you seeing the year coming up? You guys think it's going to be a bigger year than the last one? The perspective of
so we at HealthQuad have always been a healthcare focused, technology focused healthcare fund. We want technology to solve the fundamental issues that plague the Indian healthcare system, which is accessibility, affordability, and the quality of healthcare that most Indians would access. And we believe that technology and digital health has suddenly actually got a huge impetus because of COVID. At least people have gotten shying away from technology. They are open to use technology today, and that what would have taken about, our belief is that what would have taken about 3 to 5 years has actually been crunched into 6 months because of the COVID impact on the use of technology in healthcare. We believe that our focus will continue to be this sector, and we are going to put at least $30 to $40 million to work over the next 1 year in this sector. So we are very bullish on how Indian healthcare is shaping up today, especially on this side. And this is exactly what is needed to solve the issue for the low and middle income populations of India, which is leveraging technology to solve critical issues of Indian healthcare.
Thanks, Pinak. Rema, your sense about how the coming year is going to look like for you? You think it's going to be significantly more active with a lot more opportunities coming up?
So one, the overall inflow of deals, we have not seen any dip even during the COVID year. So our what we used to have pre-COVID and during COVID has remained constant. So I don't think that the early stage activity, entrepreneurship is very, very vibrant. So the deal flow still is very strong. And as we have seen even in the impact report as well, the early stage deals are likely to be very, very vibrant, right? So we ourselves would be investing in at least another 10 companies in the coming financial year. So, and I'm sure a lot of other investors are also looking at it similarly, right? So early stage deals, I think, is going to be very, very vibrant. I don't see any dip in it. In terms of growth stage and late stage, I think that in the next year as well, some of that may not be as vibrant, and there may be, people would wait to see how the pickups are happening. So what we have seen in the impact reports and in the overall, even in the macro level as well. So some of them might be more subdued over the next 12 months. It's not likely to go down, but it may not see a boom. The early stage, I expect it to be much more booming. And the late stage would continue to be where it is how we're seeing this place. Yeah? There's a lot more focus on cash flows. There's a lot more focus on how innovative these companies are, how are they extending into new geographies and new target segments. So there's a lot of wait and watch by the growth stage and the late stage guys. So I would expect it to continue at those same levels as what happened last year, but at a much more accelerated pace and at a much higher numbers is there. So we did not have a huge boom last year because of COVID and the closure of the lockdowns and stuff. This year we would see that pick up at least, definitely. So we see overall a very, very positive outlook for the coming year.
And that's a great note to end the first part of today's session and jump into Q&A. I think great takeaways for us, and we must feel heartened because early stage forms a bedrock, right? And we saw the biggest startup of the country raise $20 billion, after which a frenzied activity started across tech, to the extent that today companies are getting valued at 10 to 20 times revenue. And I'm sure that many of the investing community have a tough time managing valuation expectations. But certainly a year that's going to be full of action in the year ahead. We'll jump into Q&A. We have a bunch of questions that are there from the audience, and I'm going to kind of just take them in no specific order. Starting with a question to Dr. Pinnack, right? Your analysis on business models that would succeed in the health tech are there innovative segments in the health tech sector that you're looking into, leaving mainstream telehealth, e-pharmacy models that are already getting crowded in the space? Dr. Pinnack.
Yeah, I think a lot is happening in this sector in spaces other than e-pharmacy and telehealth. There is, I think, there are focus on wellness, and digital wellness is an important aspect that we continue to pursue and look at carefully. Similarly, on mental health, digital mental health will be an important segment again to look at. eICU services is something which is quite interesting. It's still evolving, but we believe that at some point in time it will be something which will be required to solve the larger issue of the deficiency of both infrastructure as well as manpower in most of our ICU settings in India. The other, of course, is how do you take care to closer to the patient, and in that context, I think point of care, in both in terms of diagnostics as well as therapeutics, would be the places to go to. So those are the kind of models that we believe we would be looking at. One of the things that we believe is that technology will be a backbone for many of the services, but it will never be only technology alone. It will be a hybrid kind of a model. There will be something what we would call as a physical model, which would have to be there in the healthcare sector to actually succeed. Critical success will be dependent on having both in place.
Thanks, Dr. Pinnack. There are a couple of questions on the interest of the panelists in the sector of renewable energy, biofuels, renewable energy, and other parts of the space that are coming out, that are becoming quite hot. Would anyone care to take this? Claudius, Rema, does renewable energy form part of your portfolio? Is this an area that you're interested in?
It's not our, sorry, Rema. Rema, please go ahead.
No, I said not ours too. We are also not an expert in renewable energy.
Yeah, it's not one of our key focus areas. We had some investment in microgrid companies in the past, but as said, not one of our focus areas, and so we can't make a judgment on the sector going forward.
Okay.
I would say, it's something that has not been as large a proportion of our portfolio as we would like. And that is in part because we're indirect. We're typically funding through local fund managers. And I think that the sector has perhaps lagged some others because there hasn't been as much of a bespoke programs for the earlier stage R&D investments that are necessary. And in particular, I think that a lot of the financing that has been available has gone into project financing to sort of take existing technology, and deployment has been an area of focus. I am seeing increasingly, there are groups that have come together that are advocating for better policies to enable more decentralized renewable energy and the deployment of solutions that translate availability of energy into productivity in rural and lower income communities. And I think that that's really exciting and a great opportunity. And I think that it has been a shortage of capital to demonstrate those things at scale that has been a challenge. And I think the other component of this is whenever we are working at that level in the value chain, there's so much customization that's required for different informal sector industries throughout the country, given the nature of different crops, different, what are the economies in those communities based on, and what form factor do they need their power in. And so I think that has been a challenge, but I see a lot of opportunity. Mobility in particular has fewer of those issues. That balance of customization and standardization that make them viable. And so I think it is going to be a growing sector, and that is something that we're very interested in.
Fantastic. I think we possibly have time for one more question. I think this is for everybody. How are you measuring the potential and contribution of your portfolio companies on sustainable development? Do you use an SDG framework for any of this? Anyone?
So we have is the fact that we have the SDG goals as part of our overall framework, and what for us the impact is, because we're very early stage, it's more we look at it from a structural impact, especially with technology. We look at it from a impact which happens through structural changes that we are driving. So we map it to that, and we use certain models to measure that as to what's the structural impact that we are creating over the lifetime of our investment.
We can take one last response. Hope you wind up.
So we have an impact matrix that we track, and the kind of we have something called as impact circle, that where we measure the kind of impact that has been created by our portfolio companies on these 3 or 4 critical issues, and then track those metrics throughout the life of the portfolio. We also come out with an annual report on what those impact metrics are, so as to be very, very transparent about the impact created.
Fantastic. On that note,
Vineet, if I may, I just had one question that I'd like to ask. Particularly, I think given the fact that extensive travel, is still a bit of time away, in terms of, traveling across for due diligence and things like that. So from investors' perspective, whether they are LPs or asset managers, do you see any alternative models in terms of how due diligence can be undertaken and ensuring that, capital flows continue, especially because these are periods where you want to really keep the impact sort of lens on, but at the same time not compromise on the quality of the due diligence. So whether you are an asset manager or an LP, it's the same issue. So I thought that this is something which is going to be very important, because I really don't see a lot of huge amounts of international travel, at least coming back over the next minimum of 3 to 6 months, if not more. So maybe, sorry, Vineet, I just thought this is an important question that I should ask.
So Ramraj, maybe I can take that up, since we are right now in the process of fundraising, and we see those challenges with our investors and LPs. I think there are 2 or 3 things that some of them are trying to do. One is trying to have consultants on board who could do that operational due diligence in India and rely on reports of theirs to come to conclusions on or satisfaction on the diligence. And then there are people who are actually clubbing together resources to make this happen and leveraging each other's knowledge and intelligence to make the process more efficient. So we've also seen that there is a lot of exchange of data amongst the LPs who are trying to invest in us so that it becomes an efficient process without necessarily traveling.
I could build off of that. I'd say when it's consultants are sort of one side of the equation, the other side is usually if I can't build trust on my own adequately through a digital forum, then the next best thing is the opinion of somebody that I trust who can. And so networks, I think, are incredibly important in terms of building that trust. So others that are mutually known, I think, become incredibly valuable in terms of sort of vouching for the background and being able to say that they have a history is best. So existing shared network, or that they're able to play that role in building it. And so consultants are always like one side of the equation because they're experts, but how much do you really pay them if you're paying for them? How much do you trust what you're paying for versus what comes from a pre-existing relationship, I think is an important balance.
Maybe also comment from my side, a more high-level comment. We've been working on an online due diligence platform over the last basically 8 years already. And we saw a huge increase in demand for such tools in the last year. Of course, because no one was able to travel anymore to India to do due diligence. But we hope that this remains now, even if flights are coming back, and that similar to using video conferences, Zoom and so on, has become now something normal. Maybe we also learned from the pandemic that it's not super important to start due diligence already from the ground, but you can start online with an online tool, supported by an online tool, and then maybe one visit in the end is sufficient.
Got it. Thank you for that. Vineet, back to you.
Thanks, Amraj. And I think on that note, we wrap up this session. I think it's been a great experience to, in the last 30 minutes, to hear the practitioners speak about not just the highs and the lows of the last year, but also their confidence in the year ahead. Very candidly sharing the challenges they have faced in the last 12 months, the anxieties they have gone through. I think personally for me, the India story remains very, very strong. The impact thesis remains extremely strong. India is one country that has consistently been able to deliver impact with the right commercial returns to attract the right kind of investors across the globe. We heard Yap, we heard Maggie, and I'm sure we're going to hear more as we go through the sessions today. But on that note, I think I would like to thank all the panelists for taking our time today and speaking from the heart. I think the topic is of extreme relevance given the time. For India, the financial year starts from April, and we all are looking forward to a year when, going from -7%, we're growing at +11%, and all of us would like to be a big part of that. Thank you, and Ramraj and Swasti, over to you.
Thank you. Thank you for having us.
Thank you. Thank you.
Thank you.
Thank you.
Thank you. And thank you all for your time today as well. I think the key message from the discussion was that India has emerged as a resilient market. And that's perfect for our next session. We're ready to start a second panel discussion for the day. We look forward to hearing from the impact entrepreneurs now, the real feet on the street, people behind all the real impact created and whose stories we tell. They enable the industry reports to come together, and we wouldn't thank them enough. So we have Tanushree from Doubtnut, Himani from Intello Labs, Sandeep Menon from Vastu Housing Finance, Samir from Neurosynaptic Communications. Sri Krishna Ramamurthy, partner Unitus Ventures, will be moderating the panel discussion today. The panel will take audience questions in the last 15 minutes, so do type in your questions on the Q&A chat board on your screens. With that, over to you, Sri Krishna.
Well, thank you, Swasti, and good morning and good evening for those of you joining us from different parts of the world. I've always believed it was fascinating listening to colleagues on the investing side the past hour, but I'm always biased towards the entrepreneurs because I think that's where all the action is. And I know it's been an incredibly hard year. We've seen it across the board with entrepreneurs that are on the ground. But I think what's coming through from that is really, stories of resilience and how each of us, each of the entrepreneurs that are on the ground have really adapted to this uncertainty, and perhaps this is something that I guess at the cost of repetition. For most of us, this is something that it's the first time we've probably seen this sort of situation in our lifetime. So I know it's going to be just very enriching to hear from all the folks that are on the ground. And what I'd like to start with, of course, is to make sure that we're getting a quick introduction from everyone around the room. So we'll start maybe with Tanushree, Himani, and then, of course, Samir and Sandeep. It's a diverse spectrum of entrepreneurs. EdTech is a hot sector, and Tanushee's been in the thick of that. Healthcare has seen significant tailwinds given all of the activity on the ground. So it'll just be fascinating to hear how that's played out for Samir, while financial services has stayed the course despite some of the other challenges around moratorium, etc. So I think it'll be great to hear perspectives from Sandeep around those. And agri-tech, I think while agri has always been a really hot sector, and of course very core to what all of what goes on in India. Agri-tech has in particular really seen a dramatic shift over the past few years, and Intello has been at the forefront, like a lot of the other companies in that space. So what I'd ask is for a quick introduction about each of your companies and what you do, and maybe to make it a little more interesting, really one fun habit or practice that each of you might have picked up, either personal or you instituted for your company as part of the lockdown or maybe as part of 2020. So Tanushree, all yours.
Thank you so much, Sri Krishna, for having us on the panel today. Doubtnut is a comprehensive education app. It is the largest education app in terms of just the number of users who are using it daily, with doubt solving as the hook right now. So students can click the picture of any question, right, and get a video solution. As of today, 2 million daily active users are using our Android app alone, and we are answering 65 million questions per month without any manual intervention. In terms of, because we are on the Impact Investors Council, I would emphasize on this even more, that in terms of just the students, where they are coming from, 85% of our students are coming from really small places. 85% are coming from outside of top 10 cities, but in terms of places, it's not Lucknow, Kanpur, Allahabad only. It's Amroha, Batia, Muzaffarpur, Darbhanga. 30% of the students' moms are illiterate. And for our paid users, 60-70% of the users, this is their first ever online purchase. In terms of the habit that we picked up in 2020. So 2020 was the most sedentary year, apart from the household work that one could do. So just to make sure that there is some action, of all the calls that were not video calls, I made sure we walk and talk. So that and I made sure that every day, as we were sitting in the first 4 months of the pandemic, I usually wear jeans to office. I'm still wearing jeans so that I don't run out of the waist size of the jeans.
Thanks for a very candid admission, and good to have you on the panel. I'll maybe ask Himani to introduce Intello and herself next.
Right. Thanks to Krishna. So at Intello, we're trying to build, an iconic global agri supply chain company. We were founded in 2016. We use technology to basically achieve two key objectives: enable fair trade and reduce food loss. We started with retailers. Our clients were able to achieve customer satisfaction and reduce, return of food in online retail segment by around 50%. Right, and we've recently also launched a trade platform on which we have around 5,000 buyers and 5,000 sellers and 1,200 sort of buyers, where around 4,000 tons of trade volume is what we've sort of achieved in initial couple of months of the launch. So we see a huge need of the quality-based, marketplace also in the supply chain. In terms of, one interesting thing or habit that we inculcated in the company last year was, I think initial 1 or 2 months, people started feeling very lost and distant and stuff like that. So we did two things. One was that, no matter where you are or, what you're wearing, the video was always on if it was an internal meeting. So you could, so that was the compulsory thing. Like even if it's not on, we would ask that, what are you doing, and tease each other. Right. And I think monthly we started having sort of all hands meet to stay connected and informally connect as to, how things are going in various parts of the country. So yeah, so sort of helped us stay connected, digitally.
Yeah, thanks, Himani. Yeah, I think that's true for all of us, and I think each of us has figured ways of staying connected. Samir, welcome. Would love to hear from you, and good to reconnect.
Hi, Krishna. How are you? So thank you for having me on the panel. So as you know, and we have interacted earlier, so Neurosynaptic basically works with the mission of enabling access to quality and affordable healthcare to the last mile. And we have a platform called Remedy, which stands for Remote Medical Diagnostics. Now this is for the end-to-end healthcare delivery. As a part of that, we have about 40 point-of-care diagnostic tests that a health worker can carry out near to the patient. And we have been manufacturing those indigenously. We also have a cloud-based platform, which is a SaaS-based platform, which offers the end-to-end teleconsultation, and not only teleconsultation, but the healthcare delivery, including various other processes like the medicines, inventory, and logistics management, etc. So we have basically set up more than 2,700 telemedicine centers till date, and mostly in the rural and remote areas of the country. And not only in India, but now in 13 countries, 12 states in India and 13 other countries, almost all developing countries, and many languages. Like we have Francophone language interface, those countries use French. And so those have been rolled out. We have more than 10 lakh teleconsults till date, perhaps the largest till now. I think now eSanjeevani, because of its wide deployment, will surpass us soon. But this is what I hear is the largest till date, and have brought access to more than 50 million population. We have saved a lot during their episodes of illness, about 500 rupees on an average per episode of illness, and have brought access nearer compared to a PHC by about 1.4 kilometers. Them. In the process, have also won many awards like the Tech Pioneer Award from the World Economic Forum, or the NASSCOM Social Innovation Honors, and Innovators Award from PHFI, and so on. So just taking a little break, we are both basically alumni of the Indian Institute of Science who have founded this company, and it's long back. So since 2002, and we have been waiting for the digital health to appear on the horizon since that long, and working towards developing the markets since then. So that's so. And fun habits. Well, I took to singing because a lot of time was saved personally in travel. A lot of time was avoided in travel that we used to spend in travel. And for the company, I think not much of fun, but we all learned working from home very nicely. Apart from the manufacturing and the physical support on the ground level that is required, which is very rare, all of us have been managing very well working from home and still managing the deliveries, making sure that the customer is happy. And it is working very well. I mean, there are some parts which we never thought would work from home.
Particularly
Yes.
around the fact that it almost seemed perhaps like 2020 might have been the year you were waiting for the digital health explosion. So we'll come to that in just a bit. But thanks, Samir. Sandeep, a quick introduction, and then I'll jump into some of the questions that I have for each of you, and really trying to bring out how the resilience that has shaped each entrepreneur. I'd like to bring that out some more. But Sandeep, I would love to hear from you.
Thank you. Good to connect on this. So I think it's been interesting times for us. We were actually seeded by Asha was one of our seed funds along with multiple. So we had a lot of support from impact investors, Vikram, Pramod, and a lot of others. So I think for us, the opportunity was to actually, me and my colleague Sujay, who founded this company, we actually had an opportunity, having worked in banks, to do something different. And for us, it was actually looking at saying that, do you want to go and do something which is pretty standard, or do something where the large, unique target market and the fact that these are people who deserve lending and financial inclusion, and how do you actually work with them? So, and there were a few people who had done it successfully. There were a few models which were evolving, but I guess everybody was, even now, even today, we're just scratching the surface on the financial inclusion, whether it is housing finance or we have an NBFC now as a subsidiary which does used commercial vehicle finance. The opportunity was enormous. So for us, it was an opportunity to build a significantly valuable for-profit financial services company which delivers significant impact while differentiating with technology, data science, and most importantly, our people and our culture. So I think we've been reasonably successful in doing that. Today, we have close to 22,000 customers. We have footprint across 100 markets in 14 states in this country, which I believe would be around 75% of the revenue pool of retail lending and mortgages in India. And I guess for us, what is important is to make sure that we understand that the history of lending to people in India has essentially been that you go out and find a customer, and if it's not the top end of the mass affluent segment, then the customer is often at the mercy of the lender or the financial institution. And the experience is not often very pleasant. The bane of India's financial services or retail lending to the underserved has been very small ticket sizes, very intrusive processes, very manual, and empathy for the customer and the emotional quotient that is very, very important. Because somebody who's buying a home, it's a very, very important decision. 90% of our customers stay in the houses that we have financed, and we have not actually lent to builder-led apartments. We have actually focused on the resale properties and the independent houses or the home improvements in the smaller towns of India. So if you actually break India up into the top 6 markets, which would be the largest urban agglomerations in the world, and along with that, the next 40, the next 200, actually the opportunity is not in the cities. It is in the next 200 or the next 500, urban or semi-urban or rural. So 50% of our customers actually come from rural areas. So I think if you engage with them, understand that they're all good people, and many of them have been in the same business in the same city or doing their rural activities for decades. So understand and evolve products and customize and work with them during good times and bad times. And I think that's been our thesis. And we've built a lot of tech and data science. And along with that, we've trained our teams and our customers to use a lot of technology. So I used to hear many years back that we don't want customers coming to branches in the banks because it costs a lot of money. So here it was more about access. So we created applications where customers can pretty much download everything. We never had a paper application form or a lot of other things. And I think for us, the next gateway is actually voice. Can we actually figure out what we can do with voice for our target market and the underserved? Because what you're doing with the mobile and text is a very small proportion of the target market or the population of India that you're trying to address. The real opportunity is if you can figure out voice and do what we can. So those are things that we are doing. And I think the most important thing that we have believed in this is that be open and fair to our customers and engage with them and understand them. It's very easy to say no, but figure out what can make it tick is something that's worked for us. So even when we have to repossess and sell a property, for example, we engage with the communities and the customers. And because somebody has a 40-50% equity in that property, it is important that we understand that ecosystem. So I guess understanding that ecosystem is what's been different about us.
And staying on that, and I guess I'll jump into some of the other questions that I'd like to hear from all of us in the room. And Sandeep, I guess when you look back at 2020 and obviously in hindsight, what do you perhaps wish you might have done differently in March or April of last year when things started to unfold?
Well, the way I would look at it is that we could have been a bit more optimistic in the first 2 months. I think we went back to work at the end of April, got a lot of our people back to work, because I think, as Samir said, in our kind of business also, we actually realized along the way that you can allow people to work from home and use technology. But the nature of our customer engagement made a few of us go to the field, and most of us in our company have had our rounds of COVID. And I think that's something that was par for the course in our kind of business. But yeah, it's something that in hindsight, we could have maybe handled it slightly differently.
Got it. Cool. And maybe I'll shift to you, Tanushree. What's the one learning that I guess Doubtnut won't forget from 2020, and perhaps also what's the best thing that that's resulted from the pandemic for you?
So just coming to the best thing that has resulted from pandemic, I think you talked about, we were waiting for 2020 for the digital penetration or digital working to happen. So I think in education, it was clear that in the first 2 months itself, the students realized that nothing was going to come from schools. Schools were absolutely not sending anything. And they basically moved to online education mediums, whether it was YouTube or any other apps, as the mainstream format of education for them. Also, a lot of people acquired handsets during this time. So education just sprung to the mainstream for a large part of the population. They were not looking at it as supplementary of supplementary after a point in time. That was the biggest thing that happened to education. In terms of learning, I think, although 2020 was definitely not a really bad year for education, it was in fact a good year. But learning wise, I think the biggest learning is that no plan is final. Um, you need to be extremely agile in being able to move the plans. While for education it was absolutely positive, but we needed to make a lot of corrections to what our plan looked like for 2020. For example, we did not have any plans to launch structured live classes, etc., for students until maybe 2021-22. But as soon as we saw that the penetration was happening very quickly, we said that we'll probably focus a lot more on launching structured classes versus only scaling our Q&A across languages. Also, scaling a Q&A across languages, there were some hurdles that we faced because of lockdowns, and there were some offices that we had taken up in places outside of Delhi. So just to kind of reshuffle the plan was the most important thing for us.
I'll probe a little more on that in just a bit. Samir, I mean, I guess similar to education, I think digital health took off in ways that perhaps we would have never thought. I guess things that have worked out well, and also things that you perhaps would have liked to have done differently if we were to rewind now.
So basically, I would say my learning or our organization's learning has been really to absorb how everything can really change so suddenly, so drastically, and so pervasively. Like it's everywhere. It's not just about a small change anymore. It's like complete change. So what was considered, let's say, manufacturing or automobile industry, especially personal vehicles, etc., underwent complete change. Similarly, the travel industry, complete change. So now we were perhaps at a little better end of this whole change. And we have been working for it. But to tell you very frankly, we pre-March or pre-January, I should say, there had been this constant debate as to when this sector is going to take off. And not only here, but internationally everywhere, except for US, where some of the insurance model had been working. We had absolutely very little hope from many other countries, though everyone was talking about universal healthcare. Now, suddenly, what happened with the MCI guidelines coming in March is that it turned completely upside down. So how from that, and then IRDAI also issued guidelines in favor of telemedicine. And what was seen as something, now the best thing out of that happened is basically what was a very big challenge of a concept sale. Why is telemedicine required? What is telemedicine? All of those things completely went away. And what we used to say is that unless you are face-to-face physical meeting with the customer, sale is not going to happen. That completely changed. So I have been continuously on the sales work online, and have suddenly got a very, very big boost in terms of sale here. So now we actually did some optimizations pre-COVID, and then that I think we should have perhaps handled a little better as to what could have been better. Because after we did the optimizations and a few months in terms of like the team, the way we handle business and so on, the opportunity was so big that we couldn't really cope with what was required. And we had to get many additional resources from all the supporting places, try to make sure that we deliver on time. We took some wrong steps, some right steps, some were hits, some were misses. We actually ended up launching 2 products. One of them really became successful. Another of them we had to drop. And these many relationships that were formed initially on some assumptions didn't work out. New relations formed. So it has been like various ups and downs, but continuous actions through the year. Now, so at the end of it, I think it's all good because we are able to scale the revenues to about 2.5 times of my previous year in this year. And it is only limited by our delivery capability. And
how much might you have actually projected for, as opposed to that 2x? What were you otherwise thinking of?
I mean, 1.1x was 1.1, 1.2x was a challenge. And suddenly, because we don't have team, we can only deliver this much and get 2.5x. But then you have orders close to 14x at hand, right? To be delivered over the next year or so. And it's like a complete change. I'm sure no one would have believed. So while it's, while it's sad that there had to be a pandemic to realize the importance of, it's also good that at least we have that now, and at least there will be continuity of health records. There will be some mechanism of insurance uniformly handled, and there will be people benefited because of this. It was our long-standing dream. So I think best use of technology.
Got it. No, makes sense. I'll turn to you, Himani. I think one, of course, while agri and agri-tech had in general started to see a fair bit of interest, has something changed dramatically for how either you operate or the sector operates at a sector? I mean, has something dramatically changed at the sector level? And more specifically, I know there is a consistent theme that is emerging from this conversation around change, adapting to change, managing. One part, I guess, I'd like to understand from you is I think there's at one level it's how founders manage that, but also more importantly, would be helpful to understand from you on how does that percolate at the team level, and how is that played out in the case of Intello would be just helpful to understand.
Sure, absolutely. So I think completely echoing, thoughts of what Tanushree shared, and I think even Dr. Pinak in the previous session, that digital era sort of, what we thought would happen over the next 3 years or 5 years suddenly happened in 6 months, and there was a lot of chaos, right? Again, a lot of opportunity to capture, not enough time, or even what you think is constantly changing. So we saw all that even in agri sector. We in fact preponed our plan to launch the trade platform, because the mandi system and the physical trade systems were so strong. We thought we will evolve there. While it was always there in our vision, it was not planned to be launched in 2020. So we sort of had to fast track that. Lot of changes, I think, in terms of sales strategy as well. The larger sales, the accounts, right, which were more dependent on physical meetings, you going and building those relationships. That strategy had to completely change. We started becoming more digital focused, started focusing more on smaller accounts than, because larger accounts always got back saying that, let's speak after 3 months, and nobody knew when that was ending, right? Because still we had certain places where they said, we have strict policy that we will not, even though offices might have started, we will not be allowing visitors and stuff like that. I think some parts of challenges we also faced in terms of, because our clients were always working, like agri never stopped, right, even in the lockdown. So we had to deliver, and customer satisfaction was important, right? But at the team level, like you mentioned, right, founders are always ready to work. There are 4 team members who are working. But at the team level, making them understand and motivating them to work or travel places or go to offices, even in pandemic times, was really difficult. And right, they would come up with challenges that my health is more important, or I'm living with my parents, or I want to go to hometown because everybody is going, and so on and so forth. And right, and to figure out that you still have to deliver. I think that was we sailed through it. I think that was I think good that we were able to manage, and business never slowed down. So that was a good part of it. But I think delivering it was a bit of a challenge in terms of.
And shifting gears into fundraising, I know you closed around, I think in May or so, around 6 million. I'm guessing, did you worry that as things started to change, that you may see some challenges there, or what was the thinking at that point around fundraising? And I know Doubtnut also had a great year fundraising, so would love to hear from Tanushree next on that. But first, Himani, your own experience with the fundraise process, particularly around, given that it was at a time when it started to get challenging.
Right. So, absolutely right. I think, of course, the process was longer. So, things had closed before the lockdown. And as the lockdown started, there was a lot of uncertainties. And internally, while we did sort of worry, I think very early on in the process after lockdown, I think we faced a very smooth process where, we clarified that, things are still moving ahead. Sort of, and I think even business-wise, things were not stopping. So that was a strong point into, I think, not changing outlook a bit, and I think investor community was also a bit understanding that the growth may get deferred. We don't know, but it's like not going anywhere, and it's still right to move forward. So yeah. I think we have not seen a lot of slowdown in investments overall in the sector as well.
Tanushree, would love to hear from you. Just obviously, stellar fundraise in general. more so, I guess, given how the situation played out. But one, of course, your own experience, but I think more importantly, and I know there are entrepreneurs in the room, any insights that will hold people in good stead that you've been able to glean from this exercise of doing it in more than usual challenging times. I mean, in general, we all know fundraising is hard, even more so now. So I think insights from there would be helpful.
So, it was a mixed year for us. In terms of edtech coming to the spotlight, 2019-20 in general have been very good for edtech. And in 2020, everybody was clear that edtech is going to boom, especially what they had seen in China. Having said that, in April, the PN3 came in, and a lot of our companies in India were dependent on the Chinese money for the investment, especially companies like us who were not monetizing. So, like I said, there were tailwinds from the edtech side, but there was this entire sector that had been closed. Uh, what I think was the biggest learning, like I said in the beginning also, was the fact that we wanted to do something. I mean, one, you don't need to stick to one plan. You need to make sure that you are agile enough to launch more things as you see the investor sentiment. You kind of keep taking a temperature check on the investor sentiment. If you need to cut down on burn, you'd probably do that. In our case, it was not that, but it was maybe launching long form content, the structured content. Also, it is extremely important for you to make sure that you stick to the first principles. So I feel, for our company in general, because we were teachers and not internet entrepreneurs, while we were from IIT, we, for example, when in 2017, when we were going for our first institutional fundraise, we reached out to Unitas also. Somebody had asked me what DAO means, and I really didn't know. I knew how many users were there on the platform, but I didn't know what DAO is. So basically, it was just like, you're doing things which the student needs, uh, and will consume. You are not doing things to kind of showcase it to the investor, while you are taking a temperature check, but you are not doing things only as you see the investor is asking for. If you're right on the first principles, you probably navigate it somehow.
Got it. Got it. I'll move over to you, Sandeep. Just, how are you thinking of 21, 22 at this point in time? And I'm guessing there's still a bit of the moratorium overhang and those sort of prevailing macro trends. So what's the thinking, and how are you seeing things play out in terms of as we come out of all of this?
So I guess this has been great learning, and it's taught us to be very strategically agile and do a few things right. But having said that, I think compared to say last January, our disbursement growth has been around 60+%. Collections are pretty much back to normal post moratorium, and I think there is a lot of resilience in the sector. So if you take out the larger ticket urban markets and you take out the under construction markets in some state, I think people who are staying in their own house, I think have shown a huge amount of resilience. So there would be challenges in terms of if they're earning 2,500 rupees or 3,000 rupees a day. Maybe they would be earning 1,500, but most people are back on track. And there is also a lot of pent up demand, and there is attraction in terms of price points being lower. And a house is currently the most important thing that people want, especially when you have to spend all your time at home in many a case. So I think I think the sentiment is pretty good. Things are pretty much back to normal, and most well-managed companies which would have conducted themselves in the right fashion during good and bad times, I don't think we'll have too much grief, especially in mortgages or secured lending or those kind of places. So I think things are pretty back to normal, and things can only improve from here.
Got it. Samir, how are you thinking of this year, this coming year, and perhaps a year or two looking forward? Do you see these tailwinds sort of being able to propel you further, or what's the thinking?
Absolutely. So digital health is here to stay. That's the first thing. And of course, it may have overshot for some time, but it will still settle much higher than what it was earlier, both in terms of acceptance and usage. So now here is a little bigger challenge for us because we have been around from many years. And I think that becomes an obstacle also in sort of going out of the orbit, or sort of getting into a higher orbit. And that's where our primary challenge has been. So unless we are able to demonstrate the delivery, not only just the sales part, but the delivery also, it would have to wait until then to till we go for fundraise. So now there have been many telemedicine companies that have now come up, and there have been many more competition to us also. But then, and many have raised funds. We have companies like M5, we have companies like DocSap, etc., who have raised a large amount of funds. That's a good sign. Competition is good, and I'm happy for that. And so essentially now our plan has also been taking off since this year. We are already showing some scale. We are also already showing some large orders at hand. Some of the governments have recommended our solution after assessing the pilots to be scaled throughout the countries, etc. We are working with many international partners for the other countries, especially the developing countries, the Central and South America, the southern part of, the Sub-Saharan Africa and Southeast Asia, with those partners. So we are basically now going to get into the fundraise part. Now that we have ascertained many of these orders and execution, I think it has been more challenging for us because of the history, which has been more or less straight line.
Sure.
But given what has changed on the ground and given our performance with the company, this will be a huge year for us. Both international expansion in terms of teams, sizes of the projects that we undertake, and the ability of the organization to take on some of those challenges in widespread deployment. So those are things in front of us really in this year.
Excellent. Just a quick reminder to folks in the audience: if you've got questions, please do post them in the Q&A box, and we'll make sure we're getting those answered. Maybe a last question to go around the room. When we step into, say, 2025 and we look back on 2020, what would be that one word or maybe a phrase that you think will come to our minds when we look back at 2025 years from now? Maybe start with Tanushree.
So Shri Krishna, I think I can't think of anything honestly more than just the phrase coronavirus. Actually dealing with two toddlers at my home, I realize I think that's the one word that they have used the most in this entire year. So I really I can't really think of anything more than coronavirus.
Samir?
For me, it's I would look at it as a turning point.
Himani?
So I think it reminds me of a famous quote by Mandy Hay, which is trust the wait, embrace the uncertainty. When nothing is certain, anything is possible. So
that sums it up quite nicely. And these quotes have a way of coming back on us and staying relevant through our lives. Thank you for that. Sandeep, what would be the thing that comes to mind for you?
Resilience and adaptability.
Right. No, makes a lot of sense. I think that's again just something that stood out for all of us, and I think much more so for entrepreneurs. I'll start to take a few questions from the audience. I think one of the questions, and maybe I'll ask Tanushree or Himani to respond to this, is what was investor behavior like, and how was the response from investors?
So, if I don't think investor behavior was anything extremely abnormal. It was as if it was exactly according to the situation, honestly. The first
Thank you
2-3
for being
months.
kind to us. I didn't mean to interrupt. Please go ahead.
And it was in the first 2-3 months, there was a lot of uncertainty on what will happen. And I think the investors were choosing to tread carefully. So, and I know of a lot of companies who had, while you hear the wrong stories about term sheets being withdrawn, but I also know about companies where the funds were not dispersed, the lockdowns had happened, and the funds were actually still dispersed. So I would think that it was exactly how the situation warranted it to be. Sometimes it's slightly more exaggerated, even in terms of what the response is, but I would say that the investors were very kind.
Himani, any perspectives there from an investor standpoint, given your interactions?
Right. So, like I mentioned, earlier that our interactions were very smooth. So that was great. And like Tanushi mentioned, there were of course a lot of stories about term sheets, getting withdrawn in the market. But I think that was pretty much responding to the market situations, right? And I think uncertainty was the was the word that came to my mind in 2020. We have been so agile. We have been moving our strategies, and I think same thing happened in the investor community as well.
Okay.
And of course, I think new deals were definitely traded.
Right. Yep. There's another question which I think Samir may be in a good position to respond. An interesting trend we are seeing, and I think this is reflecting on this panel as well, is that at least 2 out of the 4 enterprises today run global operations. So do we see this as a more distinct trend where quality impact companies from India can actually create impact globally?
Actually, yes. I think we have a lot of innovation. I mean, I'm sure about the Meditech space definitely. Now, there are certain obstacles in the path, and I would say government is doing a reasonable job in terms of policies, in terms of opening up things, in terms of learning. There are many hurdles. Like doing high-tech stuff, we are still floating around somewhere in the lower technology part, because it needs science investment somewhere to be able to get onto the more impactful things. But we are realizing that, and from the past, the way CDSCO, the way the BIS has evolved in terms of adopting the standards, I am sure if we remove some of these basic hurdles, people will fly globally. I think we are perhaps the best in the software. In many ways, we will get very well in the devices space, which is one of our aspirations. And there is no reason why we should not be able to. And guide to, at least I'm sure, about the developing world, we will show the path of universal healthcare. On the other side, to the developed world, about the cost efficiencies in many of these aspects. So there is a lot to take to the world. We will rise to the occasion is what my thought is, what my gut feeling is.
And do you see that playing out similarly, Himani, for agri going sort of global from India, and how are you seeing it perhaps from where you sit?
Yeah, absolutely. So I think we already have presence, in Singapore and US, and we saw very similar trends across geography. Of course, I think rules and regulations keep varying, and you have to keep adjusting with time and as per geography, and to sort of navigate through it. But high level trends we do see, I think, across the
I don't think we have very many questions at this point beyond this, and I know we're almost out of time as well. So maybe a quick, any final comments from anyone that they'd like to share with the rest of the group? No, I think I do think we've all summed it up quite nicely, and I think Himani's quote does resonate for all of us. But I think what I'd like to leave all of us with is the fact that we've seen through incredibly tough times, perhaps not something that we might really see again in our lifetime, one hopes, and the fact that entrepreneurs in general, and I'd say even more so when it's an impact entrepreneur. I think this is doubly harder when you're solving a problem that's not sort of as front and center as it is for say other types of challenges that we're faced with. So it clearly has been incredibly hard, and to just hats off to each of you for seeing that through, and then of course being willing to candidly share all of that on this forum. So thank you very much for your time and insights, greatly appreciated, and of course more power to you and to the incredible work that each of you do. And with that, I will turn it back to Ramraj and Swasti.
Thank you, Sri Krishna. Thank you for making this so interactive. It was a very interesting discussion. And thank you, all of you, for your time today. Very, very inspiring to hear how you remained resilient, how you pivoted your business models to quickly adapt to shift in demand patterns. Agility seems to be the best strategy for all of you impact entrepreneurs. I would now like to hand it over to Ramraj Pai, CEO IIC, for the closing remarks, and then we can close.
Thank you, Swasti. I think I don't want to spend too much time. I think it's been a long day, and it's the weekend also. So, but I think this was a fascinating conversation. To hear from 4 entrepreneurs from 4 disparate sectors, all of whom have had very differential, if I may say, impacts, and their businesses have been impacted in a very different way. It was really fascinating to hear all the stories and how all of you guys have managed. And I think I was very struck by the words that Samir used, in terms of the fact that we will lead in universal healthcare for the developing countries, and we will teach the Western world about cost efficiencies. At some level, I think that resonated with me, not just for your sector, Samir, but I would want to believe that it resonates for a lot of the common elements, that all deep R&D is something that we need to get better at. I think this is really a tribute to the entrepreneurial talent that we have in the country, and it was really fascinating the earlier, panel to hear about Rema and Dr. Pinak and others talk about the fact that early stage deals, which also we saw there continues to remain a very, very high upsurge of early stage, seeds, pre-Series A kind of transactions. And I think the entrepreneurial talent in the country is very much alive and kicking. I think all of you are testimony to that. I'd like to really thank all of you here on the panel, Samir, Himani, Tanushri, Sandeep, and obviously Sri Krishna, for your time. This has been a fascinating conversation. At IIC, it's indeed a privilege for us to, host all of you and help tell your story. I think we've had, a fairly, I would say about 140, 150 people, with many, many people, I think, dialing in from New York. We had a lot of people dialing in from Europe also. I'm sure we will continue to highlight, great stories coming out of India, both from an investing perspective as well as from an entrepreneurial perspective. So I'm looking forward to, your continued support. Thank you all, and have a great weekend ahead. It was really a pleasure. Thank you very much, everyone.
Thank you so much.
Thank you so much.
Pleasure to be here.
Bye. Thank you, everyone in the audience. Thanks a lot.
Thank you.
Thank you.